What's up, guys? How's everybody doing? You guys good? See, Kirk is here, Vivek is here, Byron, Azhar. What's happening, guys? What's up? What's up? Sorry, I'm still having issues with OBS for my video. Not sure, but I'm gonna try and sort that out later on. But for now, yeah, we've got the charts in front of us. Bit of a rough end to last week. I know NFP was a bit of a mess up. We shot up in profits and then, yeah, price sort of fizzled out, came back down in seconds. Took us out at entry, but yeah, it's been a bit of a challenge at the end of the week. First half of the week was solid, but yeah. All right, so just quickly, guys, what we're going to look at on this coming week. This is gold currently, so we will start off on gold and then move on to US 30 and Nasdaq and so forth. What we will do currently, we will remove or reset the chart. Alright, actually I want to leave it here because last week's update, before we do that, last week's trade I think played out to the T on gold. So on Sunday last week I did that breakdown for you guys, and if you looked at it, that was the point of interest on the 4 hour that I gave you guys. Can you see how we drew into, how price drew into? So we had taken that previous high, closed above it, and we came back into, so last week I had this zone marked out for you on the live. You guys all could have caught this move from the what you call it, 4 hour FEG. We had rallied, and I think the target I gave you was 850, which we had surpassed already. Okay, so we've already taken out 850. It's been a good bounce from that 4 hour FEG, and basically, yeah, that was the move that you could have basically caught. So yeah, let's just go down to the daily. Okay, we're gonna start here on the daily. Let's remove all the drawings. You guys can feel free to ask me anything in the chat box as well if you've got any questions and so forth. But we will start looking at it here. So currently, again, gold is overextended. We've been rallying for a long time now, since December already. We've been sort of in this rally here, but ever since so this was this December last year. That's the rally I'm talking about. It's been quite a good pump, but no real retracement as yet. So on the weekly, we are trading at all-time highs. You see that we do have a close above the previous high, which was resting above there. So we know that liquidity has been taken already, but being an all-time high, we cannot just sell based on the fact that we've swept the liquidity. We had needed to see more confluence up here, but does not look like we're going to get that. Gold has been quite strong, and that's obviously with the impact of Trump and everything that's been going on currently as well. So with all the tariffs and everything in place, that will naturally sort of bring the dollar lower, a little bit lower, which is why gold has sort of become, you know, the safer haven, so to speak. So that being said, this is the last move that we looked at on gold. We had a pull back into that weekly fair value gap, clear bullish structure. So if you were to pull your fib, that would be the low and that would be the high. Okay, you would need to see a retracement back down to your discounted levels, which would be below the 50%, right? So daily still quite strong on the bullish side. Nothing as yet in terms of delivery downwards. On the daily, quite a tough market to trade. Price has been rallying without any real pullback. As you can see, we have been obviously tapping into each FEG along its run, or each buy side imbalance, sell side inefficiency on its run, right? You can see that we've got it 3 times over here, quite clean taps and a run up from there. That being said, we are trading above the previous all-time high. So that was the previous all-time high, which we have cleared and traded above. We have now created some sort of liquidity that had been resting above here. On Wednesday last week, you can see that price has run that high. Okay, so we have run that high and we have started to show some signs of rejection. This right here is a rejection candlestick. We've got a massive wick above, small body, and we have scooped to liquidity from a previous daily high. Okay, so we are looking for potentially a little bit of a move down, but we need to identify that on the lower time frames. Remember, weekly is still quite strong bullish, right? So if we look at the 4 hour, we drop down on the 4 hour. The 4 hour, that's what we are talking about. So this being the higher low, if you are marking out your structural points, you would mark out, so this was obviously the sweep, but we had the higher low there. This was the higher high. Then we've taken out the higher high here, and this becomes a new higher high, right? This is now the higher low. We've now rallied. We've created a new higher high, which has now been taken out, and the higher low being taken there. So in order for us to assume a retracement move down, or anticipate a retracement move down, we would need to see price break and close below this low, right? We would need to see price break and close beneath that low. So we need to close beneath this candle here, and preferably to run this low down here. Then we can assume that we have, or anticipate, a market structure shift, because you've had the run of liquidity above here. Now you'd need to wait for price to close below this level and then draw back up to give us a confirmed shift in character, right? Before tapping into one of the point of interest that it needs to create on the lower time frame within this impulse leg here that we are anticipating. Then we would look to get in on the 1 minute or 5 minute shift around that area within the higher time frame point of interest for a retracement move lower, right? These become the next targeted areas. So areas like this would be your higher low, liquidity resting beneath that, where you've got stop losses that are piled up beneath that area. Your next targeted area would be down here at that area, as well as this low down here, right? So we would need to see price give us a shift in this area before we can assume that. I'm going to move these out of the chart for you guys, just to clear it up. Okay, so that is exactly what you want to see, but however, as of right now, it is a waiting game. We've taken the liquidity up above, which is a good sign, but we did not see a shift as yet. So we need to see a shift of character on the 4 hour time frame before we can drop down to the lower time frames to capitalize on that point of interest that we are looking at, and then target this firstly obviously into this imbalanced area here, right? You can see we've got what we know as an IFEG in this area. So we've got the IFEG here. So that's an inverse FEG, sell side imbalance, buy side inefficiency, which was then flipped into the buy side imbalance, sell side inefficiency. So that would ideally be the first target beneath this low, right? So once you get that shift, that's my target, and then we would look at potentially a deeper move to run this sell side down here. But yeah, that's what I'm looking at on gold. However, the alternative to that is if we do not break and close beneath this low, then we could potentially continue a run up. So you might see price accumulate in this area or give us this box, consolidate in this area for quite some time before a potential, before another potential breakout to the upside. It all depends on what price does at this point. Anywhere above, if we close above this, you know that we're going to obviously be rallying upwards in excess of a 2,880 level. Ideally, you'd want to see the retracement. Like I said, price is extended quite drastically on the daily and the 4 hour, as you can see. So we'd like to see price retrace into a little bit more of a discounted level on gold. Any questions, guys? Any questions? Do you see a retracement for gold in gold, Benedict Dreyer? Yes, I mean that's exactly what I've been trying to break down. Price is extended quite a bit currently, with no retracement as of December last year. So we could potentially in the next couple of weeks be looking at that move that I told you guys about, a little bit of a move downwards for a retracement, targeting those targeted areas of liquidity and imbalance that I mentioned. So Caleb Perumal says, hey bro, will you be live for New York session tomorrow? I'm not too sure. I will let you guys know. Supernev99, yo, what's happening? All right, cool. So let's move on to then, we can head on to, let's jump on to the big one, which is US 30. All right. So, looking at what happened last week, we did see price take out the previous week's low, right? That was down here. So we have taken out the liquidity that was resting beneath that low, and we were anticipating price to rally up and take out the high from the previous week, right? We ended up rallying almost to that area, however failing that high. As you can see, we have failed to take out that high. Does that mean that there's no liquidity up there? No, absolutely not. There still is liquidity resting there currently, which price will sort of come back at whichever particular time to take. For the time being, we've got to adapt to what's currently happening, and you can see that failing that high and maintaining this weekly fair value gap. I'm just gonna put it here for your reference. So that weekly fair value gap is sort of respecting at this point. So could we potentially see a move lower? Definitely possible. There is chance of a move coming lower and potentially retracing a bit. There is a point of interest that we would need to look at on the weekly, and that would be down here, right? You've got a small point of interest on the weekly time frame which rests down here. So quite potentially maybe price failing this high is indicating that we still need to run lower, right? So this would be ideally a good discounted area for us. If you pull the fib from the previous low to its current high, that would be beneath the 50%. So that is our discounted range, guys. that fair value gap sits within the discounted range. But we need to study this deeper on the daily and the lower time frame. So what's actually happening here, you know that we've had the major sweep that occurred down here, right? So this was the major sweep early Jan. We've taken out November's low, which was down here, and we rallied up to fill all this imbalance that was left behind on the daily and the weekly time frame. By doing so, we've also left behind its own set of imbalance, which rests now in these areas down here. So yes, that's the weekly area up above. This would be the daily area down below. So quite potentially, if price is failing to reach this high currently, we are most likely going to take out this low again and potentially tap into this area here before the next move up, right? So we might be seeing something like this before we run up, and again Fibonacci from the low to the high, you would understand that we are beneath the 50%, which is our discounted range. So ideally, that's potentially what we could be looking out for within the next month or two. A move lower might even happen sooner, guys. You know, we might even have a few big days. You know, there's a lot of volatility in the markets and volume when Trump is in power, which, you know, a move like this could happen in a week or under a week, where we could drop down and tap into these areas before turning. But yeah, those would be my daily point of interest. Last week's low being down here as the interest area. So we've got last week's low would be sitting here, and last week's high would be up here. So based on where price rallies to first, in this case I want to see price run down beneath these lows and then look for a proper buying opportunity or a swing to hold it back up to that area here. That's what I am looking at on US 30, just to look at it on the 4 hour for a little bit more confluence. If you can see, there is was this one tapped? Okay, so if you look at it here on the 4 hour time frame, we have these two equal lows here. Can you see this candle? So if you go to your 1 hour time frame, this and that are our equal lows, right? Can you see how we've got the wick there and the wick here? On the 1 hour time frame, that becomes your equal lows, because those are candles at those two areas that were equal lows, and beneath that there is a 4 hour FEG that resides within that daily FEG in that area there. So that why I'm saying good potential for price to come back there. Just remember this price level, 43,290 in that area, 43,290, 43,280. Go to the daily again, that's our area. Can you see there? That lines up exactly almost to the T with the daily area. So 43,290, 43,260, that area. Can you see? We line up. So that would be that would probably be the optimum trade entry at this area here, beneath the 50% in our discounted range at this point, because of the fact that we have failed to take out this high. We need to obviously see what happens, where the price opens above, opens below tonight, and then, you know, that will provide further detail for our week ahead. But yeah, that's my outlook on US 30. Any questions? Markets will be choppy as Wednesday CPI. 100%. You know, always risk less on weeks like that, where you've got big news, NFP, CPI, on those particular days. If you're not willing to, you know, trade it, don't trade it, you know, because you on those days you should only be risking what you can basically afford to lose. Yeah, those are trades that fall outside of your trading plan, and yeah, there is no sort of guarantee on those trades. The markets will still do whatever it wants to do on those days, regardless of what you think it's doing technically. And that is simply because of fundamentals and the impact that these news events have on these markets. Okay, let's go on to, we can go on to the NASDAQ quickly. So NASDAQ. Looking at, I looked at NASDAQ a little bit earlier on, and I don't exactly like what I'm seeing. There was an opening range gap from at the end of Jan, 27th of Jan, which has been respecting, as you can see. We have, however, been stuck in a range, guys. NASDAQ has been in this range. Can you see? This would be the range that I'm referring to. This is a range. This is currently a range bound market. Not really ideal, and yeah, it makes it quite tough and difficult for one to trade this, because you can't really hold those positions for too long, especially if you're trying to swing it and you're trying to reach for these highs or these targets up above. It makes it difficult, guys. So yeah, on NASDAQ, again, I think we failed to take out last week's high. So if you look at the weekly, or we actually didn't fail. We created an equal high. So yeah, so now we've got basically liquidity, equal highs resting above here. So that becomes your level to watch out for. We have not taken out the previous week's low, because the previous week's low was a raid on the week prior. So potentially, yes, we could see a bit of a move up. As you know, last week, NASDAQ has been moving, and US 30 sort of was moving in the opposite direction. We were selling off on US 30 on a few days, and NASDAQ had sort of rallied in the first half of the week, which was here. However, Friday, both seem to have sort of moved in the same direction. So yeah, just watch out for the divergence there between the two. Until we break below this low, I will not look for sells. We are still leaning towards a bullish bias, guys. So here, if you look at the 4 hour, the 4 hour has been okay. I think we would. So this was the previous opening range gap down here, and it does look like price is going to retest that. So if we look at it here, sorry, let's just do this. This is the area, so we are most likely going to retest this exact same area, which we are doing now, and run up. I would like to see price invalidate this current push, meaning I would like to see price run up above that and invalidate the sell side imbalance, buy side inefficiency, which rests at that area. So I'd want to see price run up, close above that, and then come back down to retest it before moving higher. But yeah, like I said, bit of a range, not ideal for me. I don't like to trade this sort of market condition. It's quite range bound at the moment, guys. So it makes it quite difficult. Any questions, guys? Any questions? Nothing, guys. Anybody in the chat? Let me just check the chat again. Nope, nobody's saying anything in the chat, so everybody's got it. Everybody understands. All right. Yeah, so that's it from me, guys. Hopefully my camera works so I can go live tomorrow for the live stream. And yeah, we'll catch you guys tomorrow. Have a blessed evening and a profitable week ahead, guys. Take it easy. Cheers.